the IT space. And if we look at the numbers, it's sort of a mixed trend so far for the tech majors for the quarter gone by. Majorly, the companies have disappointed, but yes, of course, there have been some outliers too. So let's go across to my colleague Ashesha, who is here to get us with a roundup and the guidance that has been shared by the companies. Ashesha.
Well, yes, most large cap and several mid cap IT companies have now reported their numbers, and let's take a look at how they've performed versus each other. First up, let's talk about the constant currency revenue growth, where TCS reported a negative CC growth of 3.3%. We had all other companies also reporting, several other companies reported negative numbers. Remember, HCL Tech reported a positive CC growth of 0.8%, Tech Mahindra and Wipro at minus 1.4 and minus 2% respectively. Meanwhile, as far as EBIT margins are concerned, for TCS, they declined by about 30 basis points. For HCL Tech, we saw a decline of about 80 basis points. Meanwhile, Tech Mahindra reported a margin uptick of about 60 basis points. So that's the kind of move and constant currency growth and margin profile that we have seen for most of these IT companies. Now, shifting focus to some other parameters then, and deal win, that is also an important metric to watch out for. TCV growth for TCS came in at negative 23%. This was a major negative. HCL Tech reported a 40% drop in its TCV growth. We had Tech Mahindra and Wipro on the other side reporting positive TCV growth of about 1.3% and 26% respectively. As far as employee addition is concerned, HCL Tech and Tech Mahindra didn't report any employee addition. Nearly 5,000 employee addition is what we saw as far as TCS is concerned, although Wipro lost some of their employees in the quarter gone by. But what is crucial is the management commentary and the kind of guidance these managements have given. First up, Tech Mahindra, they said that they will exceed peer average in FY27. Some of positive commentary that came in from Tech Mahindra. HCL Tech, meanwhile, went ahead and cut their margin guidance. In fact, EBIT margin guidance has been cut to 17 to 18% for FY26. TCS said that FY26 is largely expected to be a better quarter for international markets. Meanwhile, Wipro, which reported its numbers yesterday, they said that the second half of this financial year is expected to be better than the first half, and they've given a constant currency revenue guidance of -1 to +1% on a sequential basis for the second quarter. So yes, it has largely been a mixed bag across companies in the IT sector, but commentary is something that will be keenly awaited.
Oh yes, that's that on IT. Pretty much most of the report card is out. But Dilip, not that the street was in any case going into IT earnings with high anticipation. Yes, there is a Wipro, which is a bit of a mixed bag. But I guess because of, the low expectations, Wipro managed to surprise on the upside. But do you think IT still remains an avoid?
Yes, certainly. I think in the absence of any great visibility over the next couple of quarters, I think it's best to avoid IT for the time being. But not to forget, as I always mention, that most of these IT companies are very well-managed companies, and EBITDA to free cash conversion is very strong. And I think though their ROEs have been coming down, overall, I think on a overall parameter basis, corporate governance, they have been pretty good. So I will not buy at these levels, but maybe if it comes down further by about 10% overall, that would be quite a bit expecting. But still, I think I would look to buy at lower levels. And just to give a defense to the portfolio, not to get anything great proactive returns on that, but that is how I would position and play IT.
Today coming in on IT, but yes, Mr. Bhatt, would like to thank you for taking the time out and speaking with us. Really appreciate that.
Always a pleasure. Thank you so much.